So basically this was the trade. The first one, 50 pips stop loss with a 150 pips take profit, while the other one had a 205 pips take profit with a 69, let's just say 70 pips stop loss. Okay, basically this was what happened. For the first one, it was an early entry. As you can see, we entered around 2:30 a.m. Now if we look at this, let me just mark this out. So price has been doing a fairly uptrend right here. Then price got to this place and did a little retracement for a continuation that broke structure right here. So this little retracement, we can mark that out. So let me just mark it out right there. Okay, now that it has been marked out, that's an area of interest. That place becomes, this blue zone becomes an area of interest, seeing the fact that price it came down there and then did a break of structure, which we can see right here. Okay, continued in its direction. Price continued in direction and then later came back to retest that zone. However, before price retested that zone, we entered for a buy at this zone right here. Why? Because there was another minor retracement. If you go down to the 5 minute, you will see that it's kind of a retracement that looks um kind of big. So that place also was marked as an area of interest. So that makes it two area of interest. So the mistake that happened there was that I placed a higher priority of an area of interest, which was this one right here on the 5 minute. On the 5 minute time frame, it happened to be a good area of interest, so I went ahead to put more priority on it than the 15-minute one, so causing us to enter for a buy around this region right here. I'm coming. Yes, with stop loss below this area of interest. Price came back to retest, so having entered for a buy from here. Let's go to 5 minutes to have a clearer view of what I'm talking about. Yeah, we are here. So you see what I was talking about, the area of interest on the 5 minutes. As you can see, it appeared to be a key area of interest. Let me use a cycle to highlight it properly. Just use it to highlight it. As you can see, it appeared to be a good area of interest. We always create a reaction when it approaches a zone. So as we can see right here, let me reduce this circle so we can see it properly. So we see what happened. Price did a minor push to the upside. Yeah, it did a minor push to the upside with two candles closing, then came back to for a retracement back into the 15-minute area of interest we marked earlier, but we didn't enter immediately after that. As we can see here, price did this up down thing. Okay, as we see here, sellers try to push the price down, but the buyers were kind of strong at that zone. This was where we entered for a buy. See, having respected that zone, and you see price came down with a little retracement, then we went in for a buy with stop loss at that 15-minute level. We placed our stop loss a little below it. To be on a safer side, we allowed a little adjustment below the level to allow for spread also. Why did we place our TP at that level? If we look at the where our TP level was, that zone right there, we can see that it's actually a level of interest, is an area of interest. Price came down to that level one time, two times before actually, creating a downward movement. It is more of price approaching an area of interest, and yeah, that was why our TP level was placed right there. And yeah, we could see what happened. Price went to our TP, and then yeah, even did more movements. But yeah, that's basically how the trade happened. Yeah, if you have any question, you do have to drop them in the comment section. Then we'll catch you in the next one. Bye for now.